Welcome back, everyone. Today's explainer dives straight into day 19 of the Crypto Trader Journals. And let me tell you, it completely strips down how we think about the spot market. We're looking at a bare bones, absolutely essential framework today that is literally going to change how you approach your very next trade. So let's get right into it.
But before we actually look at the rules themselves, I want to pose this question directly to you. What actually makes a strategy complete? Is it just picking the right coin at the exact right time? Or is it something more? Think about that for a second. We hear the word strategy thrown around constantly in trading circles, right? But the journals give us a definitive, rock-solid checklist for what actually makes a strategy complete.
Okay, let's dive into this. Here is exactly how we're going to systematically unpack the life cycle of a trade today. First, the paper-traded strategy. Second, reading market conditions. Third, sizing and the entry. Fourth, targets and stops. And finally, number 5, the final exit.
All right, Section 1, the paper-traded strategy. This is where we build a foundation.
The journal specifically commands us to build a paper-traded spot strategy. Now, if you aren't familiar, a paper-traded environment is basically a simulated, risk-free sandbox used to build and test your strategy before you ever execute real trades. Think of it like a giant flight simulator. Why does the text absolutely demand this? Well, because you don't want to build your parachute while you're already in freefall, right? Especially with real capital and high emotions on the line. You've got to prove the concept here first.
And that brings us to this brilliantly structured 6-point blueprint. It's a strict chronological checklist: market conditions, entry, stop, target, position size, and exit. These are absolutely not just random concepts you can pick and choose from. Every single one of these boxes must be ticked to elevate a mere idea into a fully fledged, complete strategy.
Moving right along to Section 2, reading market conditions. This is all about defining the environment.
You'll notice the source text lists market conditions as the very first rule, and that is for a very good reason. Before you even think about entries, before you look at targets, you must define the market conditions. This rule dictates the entire broader environment where all your other decisions are going to be made. Seriously, if you get the broader environment wrong, like say trying to trade a breakout in a sideways, super choppy market, the rest of the checklist is simply not going to save you. It is the absolute prerequisite to any spot trade.
Next up, Section 3, sizing and the entry. This is where the offensive mechanics really kick in.
Now, what's really interesting about this rule is that we actually have to look ahead to Rule 5, position size, to fully understand our entry. Even though it sits a little further down the overall checklist, mentally, you literally must know your scale before you even think about stepping into the market. Defining your position size ensures that when you do finally step up to the plate, you're executing with precise mathematical intent, rather than just kind of guessing how much capital to throw at it.
And that, of course, brings us to Rule 2, the entry. Stepping into the spot market only ever happens after your market conditions are understood and your sizing is strictly defined. This isn't just blindly mashing the buy button because a chart looks green. No way. It's the calculated execution of a pre-planned rule within your overall strategy. It's that exact moment your paper analysis transforms into an active, track position.
Moving on to Section 4, targets and stops. These are your essential defensive mechanics.
So, you've assessed the conditions, you've sized your position, and you've finally entered the market. But how do you actually protect yourself? In the spot market, that initial thrill and excitement can quickly turn into pure anxiety if you aren't prepared. And this is exactly where the cold, hard discipline of risk management takes over.
The journal mandates 2 absolutely vital boundaries here. On the left side, the stop. This is your absolute risk mitigation. It's your strict line in the sand. On the right side, the target. This represents your profit-taking and goal realization. Together, these 2 boundaries completely box in the trade. You know exactly what happens if you're wrong, and you know exactly what happens if you're right. It creates the ultimate safety net for your paper-traded spot strategy.
Which leads us perfectly to Section 5, the final exit, time for the resolution of the trade.
So the crucial point here is that an entry literally means nothing without an exit. Rule 6 is the definitive end of the trade. It's the moment where you execute the parameters you previously set. Whether it's taking profit at your target or cutting a loss at your stop, the exit rule ruthlessly enforces discipline. That way you never end up aimlessly holding on to a spot position, just hoping and praying it magically turns around.
Let's look at this complete 6-rule anatomy one last time. We've got market conditions, entry, stop, target, position size, and exit. Notice how these 6 distinct rules completely lock together? If you remove even one, the whole strategy collapses like a house of cards. I mean, you can't properly size a position without knowing your stop, right? And you can't enter without knowing your exit. They rely entirely on each other to form a completely unbreakable system.
Which brings us right back to the uncompromising mandate from the source text: build a complete paper-traded spot strategy. Now, I know it sounds super simple to just build a complete strategy, but actually executing these 6 rules day in and day out requires a level of discipline that most people frankly avoid. So I'm going to leave you with this final thought. When you map out your very next move in the market, are you actually following a complete bulletproof strategy, or are you really just gambling with extra steps? Really think about it. Thanks for exploring this one with me, and I'll catch you in the next explainer.